Hi, welcome to the Market Alert for Friday, the 9th of August 20. And bonds and bullion bounce, but rate cut hopes fade. Noisy jobless claims, tiny drop sparks, panic bid in stocks. Yes, the numbers yesterday dropped slightly, didn't they? We just moved back one day. You will see that we were forecast at 241,000, came out at 233, so an 8,000 difference, give or take. And that was enough to send the markets to the upside and also remove any hope of a rate cut. Just one number. Amazing how they use the news to move the markets around. US stock surge as decline in initial jobless claims soothed labour market concerns, and stocks surge and bonds fall on lower than expected jobless claim numbers. So there you go. So, initial jobless claims fell by more than expected. 7,000. This is, there's 300 million people in America. But there you go. That's how it works. So today, what have we got? No news today. Market to make its own direction for today. So let's kick off, have a look at the markets and start off with the Dow. So in the Dow, massive move yesterday, back to the upside following the initial jobless claims. Market up 930 point range, not up 930, but a range of 930 points yesterday. Some big moves down here at the moment. So interesting to see the volume declining there as well. But overnight, price is turning south just a little there. But given there's no economic news today, I should imagine that the market will have no problem in moving back above yesterday's high when it does get underway this afternoon at 2:30. So yesterday, market was down in the electronic session. As soon as we had the news, the market was up, and then it continued all the way up throughout the whole of the trading session. And overnight, the market's been in a range and is now currently trying to get back up off the support to the left there, which you can see. As averages go, we're back above the 200 MA and also in the right order there as well at the moment for the averages. The 5 just needs to get back above the 20, but that's neither here nor there. So going back to the daily chart, we could see the market moving up quite nicely. If we drew in the fibs from here to here, you'll see that we're at 38% retracement there at the moment. If we break out today, we could go to 50% there. In the German DAX, this breaking the highs for the second day, the previous day's highs that is, and we're just coming up to the 200 MA, they're just approaching it. The market slightly reversing on the overnight there, but above the 5-bar moving average, or a close above the average, which we've not seen for some time there. So let's have a look in a bit more detail at the 30-minute chart. Prices moving higher, then they come back to the DP. We get above the 200 MA, but then we'll push back. So we end up with a retracement there, and then the market free to move with the US on those weekly jobless numbers there. Market trading up towards yesterday's high on the overnight. Has it taken it out? Let's just have a quick look at the daily chart. Just barely. So we may have just hit this. We have, yeah, it's there. So the market currently below the close, and we look at the averages back above the 250, 20s in the right order, 5 is just below. Watch the DP, but more importantly, watch that 50 EMA if the market pulls back, because you've got support to the left, just like we saw in the Dow chart a moment or two ago. In the S&P 500, similar picture, coming off the 200 MA, and not a huge amount of buying there though, and also, again, the market looking a bit weaker overnight. Prices were sideways yesterday, ignited by those jobless claims through the 200 MA. All of the averages switching there, 250, 20 and 5, which is just below the 20 at the moment. But the market coming back to a support area where you can see prices slightly reversing there at the moment. And this is at the psychological level there of 5,300. So again, price is trying to move back off this level. In the FT100, prices are sideways. If we were to draw in the fib retracements from here to here, again, you'll see that we're 50% retracement there at the moment. So prices holding, and we've got rising lows for the last 3 days as well. So no economic news today. Gives the market the good opportunity to continue in that direction, unless, of course, having got the 7,000 weakness in weekly jobless claims out of the way, the market decides to then continue the trend that it set earlier on in the week of moving back to the downside as well. There's always that, because, if it took 7,000, only 7,000 reduction in jobless numbers to move the market up 930 point range in the Dow, then it's going to have to find something today, isn't it, to move prices, if you think about it logically. But then there's no logic in these markets anymore. So prices down. Let's finish off yesterday. Market up nicely and up to the high, and then overnight struggling with the close, but still in a sideways range there at the moment. And again, above the 200 MA, 50s above, and 200, the 20 and the 5 are battling it out there at the moment. In the US dollar, yesterday trying to move to the upside, but got hammered back a bit and down on the overnight market as well. So let's have a look at the reaction to the metals yesterday to this move. So in silver, being allowed to move up off the 200 MA yesterday, and overnight a bit of weakness there as it took out yesterday's high, but a bit of weakness coming in there at the moment. Again, all predicated on that economic news yesterday. So silver up and above the averages as well in the 30-minute chart. So again, 200 below the 50, 20 and 5, all in the right order. But the market needs to get back above yesterday's high and take out the high that we see there. We're actually above 27.50 at the moment, but let's see if it holds during the remainder of today. Gold making good strides as well, up I think $43 yesterday, so moving quite nicely. And in the 30-minute chart, again, you can see average wise we're above all of these and currently oversold, with potential to move back to yesterday's high there as well. In the gold-silver ratio, we got to 90, where we can see the resistance to the left there. May still have a go at the 92 level. There's always a chance of that happening just up there. But yesterday, the gold-silver ratio moving down a bit there, giving the market a bit of relief. But it's certainly a big move over the last couple of weeks in silver there in the gold-silver ratio. And the difference between Shanghai and London is $3.81, so that's widened out again as of yesterday, with silver moving back to the upside. Because we were set at 26.93 yesterday, and up obviously above 27.50 at the moment as well. So Shanghai setting their price a bit higher there, creating a wider spread. Let's have a look at yesterday's trades. So yesterday morning was wild before the cash market opened. We then saw prices continue to the downside once more through the 200 MA down to the DP, where we found a bit of a reprieve. You can see the market finding support, trying to come back above both the DP and the 200 MA. Prices doing this. This trade was stopped out before because it wasn't filled within 3 bars before the market moved higher. And then we just traded in a range. We had another potential trade there, which was filled straight up to the resistance. You can see there we've got resistance in both of those areas, so the likelihood was the market was going to come back and test, which it did. So we had another trade to the downside there. We've got the 200 MA. If you've got the 200 MA, you need to lock in profits there, and I just decided to take it because there was every chance it was coming back. But of course, on this occasion, it didn't. Well, it did, but it took a moment or two to come back, as can be seen there. So yeah, 200 MA, always a difficult one. On that one, you want to either get to break even or lock in profits if you can. But didn't get a return on the signals again because of the volatility in the market at the moment. The range is a lot wider. So then we get into mid-morning, and then we get the numbers for the initial jobless claims. 7,000 drop. Magic that is, isn't it? Incredible. And that 7,000 jobless claim drop, you can't make it up, can you? You can't make it up. 300 million people. But there you go. So the market sideways, and then into the afternoon, Had another one there where the market traded up to the scalp and then back down to the 50 EMA before the market reversed off this as well. Unfortunately, I didn't get a chance. I sat down to trade and then somebody turned up and I was unable to get back to the desk, so missing out on that. But prices then remaining sideways to higher, following the Dow, of course, and the S&P as it made those highs, and the DAX also trading back above the high there. So a quick look at yesterday, and now we have the overnight markets. Well, you can see yesterday's high, the close there, and the DP, and at the moment prices are on the skids there a bit, moving lower. So prices, it's very important that the market holds at the DP, as we saw earlier for these markets. Okay, that's it. Just before I do that, though, let me just have a look at where the low is. We're quite a long way off the low, aren't we, there? I mean, seriously, 100, 200, 300 and 375 points there off the low. So it's going to be a lot easier to get to yesterday's high, but never say never, as Japan's gone quiet at the moment, and they only raised the rates 0.25%. Which is incredible, and that caused a massive 12% drop on Monday in the market. Incredible, isn't it, that you can only increase rates? That shows you how fragile the whole system is when you can only raise rates 0.25 basis point and you get a 12% reduction in the stock price. Wow. Okay, well, on that note, it's Friday weekend. Have a great day, have a great weekend, and as ever, thanks for watching. See you in the next one.